In this part of Budget 2016, Direct Tax, we will discuss amendment in respect of payments made by the investment funds to its investors. In order to rationalize the TDS regime in respect of payments made by the investment funds to its investors, it is proposed to amend Section 194 LBB to provide that the person responsible for making the payment to the investor shall deduct income tax under Section 194 LBB at the rate of 10% where the payee is a resident and at the rates in force where the payee is a non-resident, not being a company or a foreign company. Company. Further, it is proposed to amend Section 197 to include Section 194 LBB in the list of sections for which a certificate for deduction of tax at lower rate or no deduction of tax can be obtained. Consequential changes are also proposed to be made to the definition of rates in force so as to include Section 194 LBB in it. These amendments will take effect from June 1, 2016. Finance Act 2015 had inserted a special taxation regime in respect of Category I and II alternative investment funds. Investment fund, registered with SEBI. The special taxation regime is intended to ensure tax pass-through status in respect of these investment funds which are collective investment vehicles. The special regime is contained in Sections 10, 23 FBA, 10, 23 FBB, 115 UB and 194 LBB of the Act. Regime. The income of the investment fund, not being in the nature of business income, is exempt in the hands of investment fund, but income received by the investor from the investment fund, other than income which is taxed at the level of investment fund, is taxable in the hands of investor. The taxation in the hands of investors is in the same manner and in the same proportion as it would have been had the investor received such income directly and not through the investment fund. The existing provisions of Section 194 LBB provides that in respect of any income credited or paid by the investment fund to its investor, a tax deduction at source, TDS, shall be made by the investment fund at 10% of the income. Under Section 197 of the Act, facility for certificate for deduction of tax at lower rate or no deduction is available in respect of sections enumerated therein. If the assessing officer is satisfied that total income of the recipient justifies issue of such certificate, Section 194 LBB is currently not included in this provision. It's been represented that the existing TDS regime has created certain difficulties. The non-resident investor is not able to claim benefit of lower or nil rate of taxation which is available to him under the relevant Double Taxation Avoidance Agreement, DTAA, and deduction of tax at 10% is to be undertaken mandatorily even if under DTAA, the income is not taxable in India. There is no facility for any investor to approach the assessing officer for seeking certificate for TDS at a lower or nil rate in respect of deductions made under Section 194 LBB. In order to rationalize the TDS regime in respect of payments made by the investment funds to its investors, It is proposed to amend Section 194 LBB to provide that the person responsible for making the payment to the investor shall deduct income tax under Section 194 LBB at the rate of 10% where the payee is a resident and at the rates in force where the payee is a non-resident, not being a company or a foreign company. The amendment will take effect from June 1, 2016. Your feedback is important for us. Mail us at tldcdeli@gmail.com or call us at 0999988235. Never miss a chance to view new videos. Subscribe our channel and like our videos.